Hey, what is up, guys? This is Gen Z Finance, and I'm back with another video. This one is going to be about Microsoft, a stock that just about everyone has used their products before, whether it's a phone, a tablet, or especially their Windows software. Microsoft recently took a dip in their share value, and I'm going to talk about why I believe it is a buy. If you guys could like the video and subscribe to my channel, it would mean a lot. As always, guys, I am not a financial advisor. These are simply just suggestions and ideas that I've come up with for my own investments. If you choose to follow what I do, it is at your own risk, so be careful and do your own research before you perform any of the trades that I perform. If you guys are new to the whole investing atmosphere and don't currently have a Robinhood account, I will leave a link down in the description below, and when you do use that link, you get a free stock valued at up to $200 for free. All you need is to be a US resident, be 18 years or older, and have a valid social security card. Now for the video. This one is going to be about one of the biggest companies in the world, Microsoft, with ticker symbol MSFT. There it is right there. Now, most of you guys probably know what this company is, and many of you probably own something that they produce, whether it is a Windows computer, a tablet, or even an Xbox. They've been producing these products for quite a long time, and they're basically the backbone of this company. But I don't want to talk much about them today. I want to talk about the new things Microsoft is creating to produce more revenue. Things that have boosted in revenue for Microsoft ever since the whole pandemic occurred are things like Microsoft 365 and Microsoft Teams. For those of you that don't know what Microsoft 365 is, it is a service they provide in the cloud that allows you to use things like Microsoft Word, Excel, PowerPoint, and all those different forms of creating documents and presentations. This has had a boost in revenue because, as you guys know, the schools have had to come up with alternate learning sources for their students when they can't come to class. Now that basically all schools in America have had to do this, they're all prepared to use software like Microsoft 365 as their primary learning source. And for how they communicate, they use Microsoft Teams, which is very similar to Zoom. If you guys don't know what that is, it is basically a way to have a meeting online where you can see everyone and hear everyone. So basically an online classroom. It looks like this, where you see high quality videos of everyone that's in your class and you can hear all of them at once. You have the option to mute your mic and turn off your camera so that if there are any distractions in the background, it won't obstruct with other people's learning. It is a pretty good alternative to actual in-school classes. And then as for Microsoft 365, you can use these in the cloud, so on tablets, phones, computers, laptops, and they provide presentation. You got emails, calendars, you have a note reminder, Word document, Excel, basically all the different forms of software that you need for running a business or participating in school. Now, you guys might be thinking that once this pandemic stuff dies off and students go back to school, the schools will all get rid of their subscription service to Microsoft. But I think it is actually quite the opposite. As you guys know, basically all the schools weren't prepared at all for this pandemic and the scenario of being stuck at home while learning. And I bet they don't want to go through that again. So I'm pretty certain that most schools will actually keep the service in case anything like this were to happen again, and they'd be prepared right away. And as for the financial part of why you should look into investing in Microsoft, in this article, it is actually under the category of buy the dip growth stocks. So other people have looked into it and they consider it a buy as well. I mean, as you can see here, Microsoft reported an earnings per share of $1.46, beating the estimate by over 9%. Microsoft has beaten their estimated earnings per share for the past 4 quarters in a row, with the last quarter being beaten by an estimated of 11.1%. They're getting themselves more invested into the cloud-based service as its revenue witnessed a 17% increase year over year. But even their base products, what their company has been selling for decades, their PCs, also witnessed a year over year growth of 14%, as it says right here. But most importantly, their net profit for the quarter was $11.2 billion, which was almost 30% of the revenue. For a company this large, it is very impressive to have this high of a percent as net profit, since they have so much to pay for when it comes to their 163 1,000 employees, as we can see right here, all their buildings, and the cost to make their products. So that being said, this is a very, very strong company that is going to be very relevant in the next decade. And in my opinion, the stock is most certainly a buy right now because of the technology dip in stocks that happened this last week. As you guys can see on Robinhood, from September 2nd to current, it went down from $232 all the way down to 213, which is around an 8% decrease. Companies like Microsoft rarely ever drop this much, as you can see when I switch it to the 5-year. It had a little dip during the end of 2018 going into 2019, and then of course it had the pandemic crash, but that's basically it throughout the past 5 years. And if we scroll down, it is one of the biggest companies in the world with a market cap of $1.62 trillion. They didn't get this big by luck. They got there with smart business partners and a really strong business strategy. Also, a little bonus to owning the stock is that they do also have a dividend. So every quarter, they give out to their shareholders a part of their profits. It's 0.95%, so it's only like $1 per share per quarter, but at least it's something. With all that being said, I believe the stock is a buy if you can get it under 220 bucks and then hold it for at least the next couple years. I'd wait maybe the next couple trading days to see if this dip is completely over. But as it's reaching the bottom of the dip, I would definitely recommend picking up the stock as an investment. Again, I am not a financial advisor, and everything I say are just suggestions and ideas for my own investments. If you choose to follow the moves I make sure to do your own research, and before performing any trades, remember to do it at your own risk. Alright, that is going to be it for this video, guys. I hope you enjoyed and learned something throughout this video, and I'd love it if you hit the like button and subscribe to my channel. It would mean a lot, and I'll see you guys in the next one. Peace.